All right, folks, it's been a huge day for silver as we awaited the highly anticipated non-farm payrolls report, which pushed silver up to $31.50, now sitting around 31. And we're going to talk about what happened and where it's headed next. We have a nice breakdown. I'll be covering something else at the second half of the video, which is just as important. Actually, could be a lot more important. Mr. Market detecting bank runs, silver on the move, goes hand in hand. But of course, first we'll just go over the immediate price action of what's happening, breaking down that, and then we will go into something that came out 2 days ago from the Silver Academy, going over silver, stock market, silver and gold, a lot of other stuff. I think you're going to enjoy this video, so make sure you like the video. If you enjoy this video, make sure you subscribe because I post daily videos, and let me know what you think in the comment section below. With that said, email me, slayer@milesfranklin.com, if you want to purchase silver for cheap, or you can call me 330-485-6172. Silver price analysis. Silver bulls retain control near 2-week highs around mid-$30. Silver seen consolidating its recent gains to a 2-week top touched on Wednesday. The technical setup favors bullish traders and supports prospects for a further move up. Now, this is what I was mentioning the past couple of days as silver broke past that psychological $30 mark. We are in a peculiar situation where it's going to be a lot easier to hit $31, $32 nowadays, whereas before that was not the norm. That was the hard part. Now it's more normal for silver to continue to hit $31, $32 rather than $27, $28. Whereas beforehand, it was harder for it to go higher. And now we broke above 30. It's consolidating and stabilizing above 30. So now it's a lot harder for it to go lower and a lot easier for it to go higher. The tables have turned. I've been saying that over and over so you guys understand this is a new situation. The days of 25, 26, $27 silver are long gone, unless something dramatically happens, which I could not see, because everything that is happening is just adding more fuel to the fire, given, for example, today. So if you're looking for a chance to buy silver, you might want to get in now, because if you keep holding off saying, oh, it's going to drop back, I'm waiting for it to drop back down to $27, $28, I don't see that happening. Right, you're playing a very risky game, because as it moved up to 31.50 today, it broke past 2-week highs, approaching 12-year highs, or I guess highs we haven't seen since 2011 on the way to $50. You're playing a risky game if you're trying to hold off. I'm not saying go all on at once and just take everything I say for at face value, but I'm just mentioning that it is looking like we are breaking above these new highs, and it's harder for it to go back down with a bottom up above $31. That's a lot. So dips towards the $30 mark might be seen as buying opportunities and remain limited. And that's another example. A dip towards $30. Isn't that crazy to say dipping down to 30 is a buying opportunity? It used to be trying to break above 30. That was the resistance we could never get through for the last 12 years. Now it's dipping down to 30. That's the buying opportunity, right? So, and there is a lot of buying opportunity there, which means there's even more support. So the days of $28, $29 silver, folks, it's going to be a lot harder to get to $29 silver before it gets to 32. It's a lot easier to go higher now. Very loose. We broke past it. Silver extends its sideways consolidative price move during the Asian session on Friday and currently trades near $30.50 area, or its highest level since June 21st, touched earlier this week. And actually, since this article came out, silver did a lot more than that. Nevertheless, the white metal remains on track to register strong weekly gains as traders keenly await the release of the U.S. non-farm payrolls report. And yeah, so this article was written before the release of the report. The report came out, and then silver skyrocketed from there. From a technical perspective, the recent goodish rebound from levels below 28.80 and the horizontal resistance breakpoint turned support, and the subsequent move beyond $30 psychological mark favors bullish traders. Right? And they're writing this before they even knew that silver would go on this huge run afterwards. So, and this goes hand in hand with the article I was mentioning yesterday as well. So these are the key, or is holding comfortably above key daily moving averages, the 50-day, 100-day, 200-day simple moving averages, the SMA. This, along with the fact that oscillators on the daily chart have just started gaining positive traction, suggests the path of least resistance for the metal is to the upside. Once again, folks, if you're someone who is on the fence just hoping that it goes down more, you have the odds against you. It's much easier for it to go higher than it is for it to go lower. The path of least resistance is to the upside. Some follow through buying beyond the weekly top around $30.70 region touched on Wednesday will reaffirm the positive bias and the lift beyond the $31 mark towards the next relevant hurdle near $31.50, which it actually just did after they wrote this article. The upward trajectory could extend further and allow bulls to reclaim the $32 round figure before aiming to challenge $32.50 or over a one-decade peak touched in May. On the flip side, any meaningful corrective slide is more likely to attract fresh buyers near 30. So right now we're we're a dollar above 30. So they're saying if it drops down, there's still going to be more buyers there. Well, of course, but that's if we drop back down there. We'll just have to wait and see. This should help limit the downside for silver near $29.75, and that's resistance turning support. The latter should act as a pivotal point, which, if broken decisively, might prompt some technical selling and accelerate the fall towards $29.10. Now, they're saying, right, first they went over, the path of least resistance to the upside, but they're playing devil's advocate, saying on the flip side, the only way for it to go back down is if we got to the $30 figure somehow, and then for some reason, if all of a sudden people started selling at that level, that it could drop down to 29. That's highly unlikely, though. Like they said, once again, they said the path of least resistance is to the upside. It's much more likely that we are going to continue above $30, that huge psychological level. Some follow through selling below $28.80 will support the negative constructive outlook shift for the near-term bias in favor of bearish traders. So they went over the bullish scenario and the bearish scenario, but which seems more likely? Now let's jump into this the second article. Mr. Market detecting bank runs, silver on the move. What is the opposite of the Federal Reserve note? Silver. And since we know that the opposite of a Federal Reserve note is silver, then what does that mean when the Federal Reserve note fails? Silver will come out on top. And since we know that it is inevitable for the Federal Reserve note to fail, then what does that also inevitably mean? Silver will come out on top. Any naysayer, anyone who genuinely thinks that silver won't do anything, has to admit and genuinely believe they think the dollar is going to stay strong and hold its value for the foreseeable future, which nobody believes. So anyone who tries to say, oh, silver won't do anything, you have to tell them, okay, then admit you think the dollar will hold its value and strengthen and everything's going to be fine and dandy. Because that's the only way silver won't do anything. And nobody in their right mind thinks that. I mean, that's literally how simple this is. It's guaranteed that silver will come out on top. I mean, it's literally that simple. You don't even have to overcomplicate it with anything else. So we have this right here, going over some stuff. This is written 2 days ago on July 3rd. Secured overnight financing rate jumps 5.4%, the highest level in history. Explanation: the secured overnight financing report is a key interest rate banks use when lending money to each other overnight. SOFR jumps when there's increased demand for short-term loans. It seems banks need some cash on hand. It could indicate that banks are kind of anxious or possibly nervous. They need more money on hand because they might sense upcoming problems with liquidity or even bank runs. Silver on the move. Let's go. Let's talk momentum. A moving average convergence divergence, or the MACD, crossover is when the MACD line and the signal line of the MACD indicator intersect. The MACD is a technical indicator that uses the difference between two exponential moving averages to determine the direction and momentum of the market. The MACD line is the difference between a shorter 12-day EMA and a longer 26-day EMA moving average, and the signal line is a 9-period exponential moving average. Silver is breaking out of consolidation, confirmed by a bullish MACD cross. Needs to see it close above the trend line, but this could be the start of the next up leg. Next stop is $35 to $36. And remember, this was written 2 days ago, and silver has jumped back up from there. So here's silver versus the SP 500. We are on the verge of busting through this technical line. Silver's remained strong despite, higher yields, which is interesting, right? Usually, we would see these things, compare and contrast against each other. It's usually the opposite, and we've seen that with the dollar as well. Like the dollar index would be going higher, and then gold and silver should be going lower, but gold and silver will go higher as well. Also, and even comparing to gold, which they're going to go over this next section, right? Sometimes, and I believe silver will take on a life of its own, regardless of what gold's doing. Silver's going to do what it does because silver has different uses and different, reasons to, rise beyond gold. There's many different reasons why silver could take off when gold is just pegged to the monetary side of things. Gold only benefits when there's times of economic uncertainty. It's a monetary metal. Silver benefits when they're in times of economic uncertainty like a monetary metal, but it's also an industrial metal, so it benefits even if the economy's in good shape or bad shape. Because when the economy's in good shape, then that means produce and all these, industries also using a lot of silver, which still, it's the best of both worlds. SG America, solar panel producer, just took delivery from COMEX 5.1 million ounces of silver. Picture shows total production of the world's biggest silver producers. First quarter of 2024, the run on silver has already started. You are now living inside Silver Squeeze 2.0. This morning, we reported on one solar project in China. Here's a table showing the relationship between gigawatts of solar power and the corresponding amount of silver required. 1 gigawatt, 500,000 ounces. 3.5 gigawatts, 1,750,000 ounces. For 3.5 gigawatts of solar, the amount of silver required would be 1.75 million ounces. This calculation is based on the estimate that each gigawatt of solar power requires approximately 500,000 ounces of silver. So consider this. One solar company, SG America, 5.1 million ounces, and add one solar project in China, which is 1.75 million ounces. 5.1 million ounces plus 1.75 million ounces is 6.85 million ounces. This table shows a silver requirement for two different solar projects, the SG and the one in China, and that's 6.85 million ounces. And then you can see all of these different mines. Right? This is crazy. This is crazy. If you look at how much silver each company has mined so far, it's nothing. Hecla has mined 4 million ounces this year. 4 million. Fresnillo, 13 million, which is actually very good. I remember last year, Keith Neumeyer, the CEO of First Majestic Silver, said they mined 10 million. Hecla mining, I think, mined 15 million or 16 million ounces last year total annually. That's nothing. That is nothing, especially when you look at 1.4 billion ounce type of annual demand we could be looking at this year. So numbers aren't adding up. We are in a very interesting situation, and anyone trying to compare it historically is missing so many key points, and that's what I hate. Is when people try to say or act like they know what silver's about to do because of something they've seen before. There are so many new variables that have never been in play before. So for them to just compare it to XYZ and not look at A, B, C, D, E, F, then they're either misleading, they're some type of ego bias where they're just closed-minded, or they're just stupid. It's one of those. Usually it's the misleading. A lot of people like to represent things in a way for their viewers to hopefully believe them without sharing the whole story, because if the whole story was shown in front of them, it would completely kill the narrative of whatever they're trying to push, which is something usually pegged to a dollar system. So anyways, I'm going to wrap this video up here. A lot going on. I will link this article in the description if you guys wanted to check it out. Very good stuff, and hopefully you guys are, you're taking advantage of these extremely cheap silver prices while they still last. thanks for tuning in. Make sure to like this video, leave a comment, subscribe, click the bell so you get notified when I upload, and share this video with a friend. Let me know what you think in the comment section below. Thanks for tuning in. This was Silver Slayer. I will see you guys later today or tomorrow. Peace.